just different.
From the college dorm room to the trading floor, Joseph Walker's journey is a masterclass in growth, grit, and discipline. In this episode of NOFOMO Podcast, we uncover how mentorship, journaling, and master risk management turned early struggles into consistent wins. Whether you're just starting out or you're refining your edge, Jay's insight on trading psychology, daily routines, and adapting to market conditions will change the way you trade. Let's get into it. What's up, guys? It's Woodz, back with another episode of NOFOMO, man, and we are live in effect with the homie Jay Walker, man. What is happening?
What's up? What's up?
Hey, man, cooling, man. Just trying to stay 10 toes throughout this trading game. You know what I mean?
With that?
Hey, man, I see everything you got going on online, bro. I like the way you move, bro, and I just wanted to have a conversation with you about your trading journey, bro. Like, tell me, how did you get started? How did you get started in day trading, and what inspired you to pursue it seriously?
So I got started in 2021. I was still in college, and I was just seeing on YouTube a whole bunch of people making a whole bunch of money in a short period of time.
Right.
I'd see 20K days, and I'll see people making money on the market going down, and I didn't understand how that was possible because, growing up, all you really see, you kind of hear about the stock market, and then you just think invest and hold your money in it, and over time it goes up. But, I'll see these people making a whole bunch of money on it going down. And I was like, I want to learn about that. So I also I went to college for accounting, and I had I was in the College of Business. So in our building, we'll see the ticker symbols, and they'll have the different ticker symbols on. It was like this big screen. But I didn't know what that meant. I just saw the numbers. Sometimes it was red, sometimes it was green. So I'm like, it was kind of all around me. But I was like, yeah, I need to kind of figure this out. So I started looking up videos, and then literally just typed in how to day trade. And then once I figured that out, I just started. I started off with terrible risk management and just literally doing almost everything wrong. But I just got started, and then I found this one person. His name is Call Me 100K, and he had a pretty good beginner-friendly program that I started learning from. And although I trade a way different strategy now, that was like my first entry into it, and I just started playing with options, and I started making I put in maybe $100 or $200 in the account, and then I started just trading options. And then I had a couple of good days where I was hitting almost 50 to 100% on my account. That's all fun and games at the beginning, but like I said, I had zero experience. So when that drawdown came, got wiped out and everything, and it was a learning lesson with that. But then I saw it. I was like, wait a second, I'm making $100 in a day. This is crazy. I'm like, and I'm already a numbers person, so I'm like, okay, so if I can make 100 in a day, that means I can make 1,000 in a day. And if I can make 1,000, that means I can make 10,000 in a day. So I'm like, yeah, this is all I need. I need to figure this out. I started, just playing around with it, getting better with the strategy, my win percentage. Even though I wasn't tracking any of that back then, it was pretty high. It was about 80%. I would trade one time a day, and I would win 4 out of 5 days. Most of the days I'll win Monday through Thursday and lose Friday. So and I'll be compounding every day. So that's what was keeping me stagnant. But
Right.
I'll be winning and then lose Friday. So then I was like, all right, well maybe let me just keep it flatline. So I was just experimenting. And one thing that I'll say, looking back, if I would have just got a mentor, to teach me all like all those mistakes up front, I could have sped run through the process. But, I slowly bumped my head and, I learned the strategy and just like kind of started just doing my own thing. But then I started learning from a different person, learning a different style. They taught me more level to level trading, but the entry model wasn't really my thing. Like I didn't really like how the entry model wasn't as crisp. So I was still looking for something crisp. That fast forwards to 2021 to like 2020. That's when I did that first strategy. From 22 to August of 24, August of last year, I did a different strategy of that level to level trading, and it was cool. I passed a couple prop firms with that, but I blew one of my funded accounts, and I was like, all right, I know how to make money. I know I need to just take this more serious. So, and I understand the market. I just sometimes will get liquidity sweep. Like I'll be the liquidity right before it pumps up. So I'm like, I need to figure out. Like I know there's manipulation. I need to figure out when that manipulation is about to happen and get on the side of it. That's when I heard about ICT like way in 2022, but I started watching his videos. It was boring, and I was like, I'm not doing this. When you start losing money, you lose enough money, and you see all these people that like
let me
learn
watch this
ICT.
boring shit.
Yeah, I was like, all right, let me see what they're talking about. So then I learned it in 2024. He had a 2024 mentorship in August, and it went through like maybe November, December.
Yeah,
but just the first 2 weeks of the mentorship, it was everything I was looking for. So like I like latched onto that. I did exactly what he was saying to do, risk management, what to look for. And from there I passed 2 prop firm accounts with Top Step in a month. And then it started getting cocky. So I started oversizing and then I got knocked out of my position. But like knocked out of that funded account. But it was all a learning experience because when you think about it, like with trading, if that was my live funds, I would still be like up big on it. Like with trading, it's just natural to go through drawdowns. But with the prop firms, you have to play that game first, build that buffer, then you could start, wilding out with the size. So what I did was I went through a drawdown, got knocked out, but then I had to I went on a huge win streak. But because I got knocked out first, I wasn't able to really capitalize on any real funds off that. But I got all that experience. So what I did was I looked at all my stats. It says I'm profitable. So I'm like, okay, I'm profitable. Now I just need to stay in the game long enough to like get those real funds. So then I started just sizing down. And like it was an eye opener because, I was used to making $1,000, $2,000, $3,000 days per account, and then now I have to get used to making $200 to $300 days. But like
the base hits,
those base hits, and it all adds up the same pretty much. Like it's all about consistency is more important than the profit. Like once you build that consistency, you're gonna build that confidence, and then you have the confidence, consistency, and you have the cushion. So now, once you have that cushion, then you can size up. And if you've been consistently hitting $200 days, now you can consistently hit $2,000 days. Before we started the call, we were talking about copy trading. Now it's 2,000 times 5 accounts. You're making that. My average hold time is 15 minutes. So you can make $10,000 in 15 minutes. That's pretty much the journey from like start to where I am now.
Straight up. And like you spoke about some of your challenges, man, and I wanted you to expound on that a bit more. Like, what were some of your biggest challenges that you faced early on dealing with your trading?
So early on, it was I would be able to identify the move, but I would get stopped out the position right before the move.
Word.
So then I would start to hesitate. Like I'll see the move, I'll hesitate, and then the move will go without me. So I'm like, all right, it's something here. And what that something was identifying levels of liquidity, I saw on your channel you talked about key levels and stuff before. You know, identifying your key levels and then seeing what price does at that key level.
Right.
Once, you know, if you're looking for a manipulation, wait for the manipulation, then enter your position. If you're looking for continuation and it pushes through, okay, now you can wait for like a retest to
Right.
get back in and go long or short based off the position.
That
So that was
timing is everything, man.
yeah.
Yeah.
So like, that was the main thing. And another main thing I picked up with ICT was there's certain times of the day that you want to look for this manipulation to happen. So like
Right.
at first I was just, you know, trading based off of what I see, but like now that I know, okay, at certain times of the day, this is most likely to happen. Certain times of the day, you expect consolidation, so
Mm-hmm.
you know when to stay away from it. So like once I combined that with that hunch I had of like, is something here? Like that was the answer. So it was the main thing was like for me getting stopped out right before the move.
Mm. So tell me, can you describe the major turning point in your trading journey? Like when did things started to stick for you?
Honestly, it was like two turning points. One
Mm.
was journaling.
Okay.
One was journaling. I
Word.
remember vividly. It was November 2024. I decided, like, I always heard people say journal. I'm like, I don't understand what that has to do with my trading. But then I was like, you know what? Let me journal. So I just journal. I'm just like I was like, I'm gonna do everything intentional. Like I'm like everybody that's profitable, they journal. So it's
Right.
like, all right,
Right.
let me like, what's so different about me? So I was like, let me journal, and I started journaling, and even my journaling got better from then to now. But I started journaling November 24, and like I journal on TradeZilla, so like I was able to track all my stats, know my average hold time, and like from my stats, I learned when I lose trades is within the first 5 minutes. When I win trades is 10 to 15 minutes. So
Right.
based off that information, if I just trade my strategy, if I'm in the trade for longer than 5 minutes, I'm most likely gonna win. So
Right.
now that gives you more confidence to scale in, or um, you know, just you could be you could have a lot less stress in that trade because you know based off your stats that you most likely gonna win this trade. And then that was like that first turning point where it was like, okay, I can see. And then now I see why people say journal, because you can see your blind spots. Like for the last 2 weeks, I lost on Friday, so let me just stop trading on Friday. Or every time I trade more than 2 times a day, I wind up giving back half my profits or turning a green day to a red day. So let me limit myself to 2 trades a day. And then I saw a majority of my losses were coming after 11 a.m. So now I trade from 9:30 to 11 a.m. and my
Mm-hmm.
win percentage just started going up. So that's what journaling did for me. And then my second turning point was taking the ICT serious, because I was halfway trading his stuff, but I didn't want to listen to what he had to say.
Mm.
And then because I was only trading fair value gaps, and then like I like just sat down and listened to the mentorship. I stopped trading live for a month, and then within that 4 week time frame, I learned so much, and I learned about the context behind his
Mm.
concepts. And then once I learned that, that was the second turning point. Just understanding time and price, understand areas of liquidity, and understanding on certain days when not to trade. So that was the two turning points for me.
Do you record your screen?
Yeah, I record my screen, and I also do on TradeZella. You could do like a replay thing,
Right.
so I'll
Right.
go relive the moment.
Mm. And because recording your screen is definitely like something that if you add it to your journaling process, that's something that could really level you up, man. Because I used to watch my trades back in high speed,
Hmm.
and because I trade order flow,
Yeah,
I wanted to understand the depth of market in detail and how it moves. So recording that screen and then watching the back end high speed replay really helped.
yeah.
Like, so tell me, how do you balance your trading with your personal life, especially on days with high market volatility?
How journal. I mean, it's my trades with personal life. although I could sit here and look at the market all day, every day, like I have to force myself to like get off the charts.
Right.
11 a.m. I'm off the charts unless I'm in a trade and managing it. Like,
Right.
but like after 11, I'm not adding on to any more of my position. 11 a.m. I have an alarm on my phone for every single day at 11 a.m. like to literally like snap me out of it. Because sometimes
Right.
we'll just get in that zone and 2 hours will pass and we don't even
Yep.
know. So it's like you have to have like something external to like snap you out of it. So for me, that's the alarm. I've heard people say they have something connected to their computer where it'll literally cut the computer off. Like it'll kick them out. So
Yep.
like, I utilize that. Well, I don't utilize that, but I utilize the alarm. Um, I utilize, like, I stick to my session. Another thing I do is when I'm trading, like I'm trading, when I'm like doing something else, I'll do something else. Like I'll peek at the charts on my phone and stuff every now and then.
Mm-hmm.
But like, if you had a loss, like leave that loss in the past. Like you deal with that loss when you journal. When you win, you celebrate your win, cool. But leave that win in the past. Like journal it and deal with those emotions and everything then, because you can't have, for in my case, I trade in the AM session. So like, if I lose $2,000 in the morning, I can't have a bad day in real life for the rest of the day. Especially, if you are a part-time trader and you have a job, like you can't have an attitude with people because you didn't execute how you wanted to. So that's one thing I had to learn too, because I would really I would lose sometimes in $1,000, $2,000, and that's valid. That's a valid reason to be mad, but
Mm-hmm.
I was like, I can't keep doing this to where like, I lose a trade in the first 5 minutes of the day and the rest of my day is ruined. Like that's not sustainable.
You
So like,
crashing out for the rest of the day.
yeah. So like, I started like really focusing on my emotions, and one of the things was sizing down to where if you lose, it doesn't ruin your day.
Right.
I cut my size in half or even a quarter, and that's I started losing like 200 to 500. I'm like, okay, like, I could live with that. Like, so that's one of the main ways I balance it, by having that strict schedule and leaving the emotions on the charts.
Mm-hmm. And like, so let's touch on your trading strategies in practice. What is your primary trading strategies, and how did you develop it?
So my primary trading strategy, I have two main ones. One is, well, with futures, is two main ones. One is it's called the forever model.
Okay.
It's basically you identify a higher time frame point of interest, so a higher time frame fair value gap or a sweep of liquidity, and then you look for a 15-minute change in the state or a 15-minute order block, and once you get that, you scale down to the 1 minute, and then you look for inverse fair value gap, order block, or fair value gap, and you target opposing liquidity. So if it was going down, if swept liquidity on a daily chart, you go to the 15-minute, look to see for change for another bullish order block, and then once you zoom in on a 1 minute, you look for a fair value gap, inverse fair value gap, or order block on a 1 minute, and you target like some highs on the anywhere between the 1 minute and the 15 minute.
Okay.
That right there, my average, I target about I target at least a 2.5 R
Okay.
per trade. Like if it could be an A+ setup on everything else, but if it's a 1.5, I'm not taking it because that's putting a lot of stress on my win factor. So my win percentage. So that's why I like to keep 2.5 and up, because I'm giving myself 2.5 chances to lose before, just I could lose 2.5 times before and still be profitable, basically. So that's my main strategy that I've been using right now, especially in this market, is real. Um, this market has been taking liquidity like crazy and aggressively going against the trend. So I've been seeing a lot of that in the bullish, especially in the bullish market. Like we know it's going up, especially in this daily trend. Like it's just gonna slowly go up over time. But intraday is gonna be a lot of creating session highs and lows, taking it and then shooting up. So you'll get a lot of those inverse fair value guys way at the bottom with a stupid high stupid high risk to reward ratio, and you could get some nice trades out of that. And then the other strategy I use, which was the first one I started with, that ICT taught in his mentorship in August 2024, was the first presented fair value gap. And that thing is crazy. So like I started, all that is the very first fair value gap of the day, created 9:31 and after. So like at market open, if the gap is at 9:30, that's not the first one. But if it's at 9:31 or later, you take that first presented and you drag it across the screen. Throughout the day, price is going to interact with that level. You could take the first trade and hit your target some liquidity, or you can take like later in the day. Actually, yesterday it went to that level 2 times. So I could have made, on the first time it went to it, it dropped like 50 points, and then the second time it went there, it dropped 100 points. So yesterday I could have made 150 points just trading that strategy. So I got 2 setups from there, and then I got 2 setups from the first strategy I told you about just yesterday. But I only took 1 trade. So when you have multiple models, you give yourself multiple chances to make money. So that's how you can deal with that FOMO. Like if you do miss that first setup, you know you have other tools in your bag. And then another strategy is combining those 2 together. So if you have the forever model playing out pre-session, and then once you get into open, you could get in on that first presented fair value gap as a continuation. And if you combine 2 of those high probability models, then you have a real good high probability setup. You could probably size up on that trade.
So like, how do you approach risk management? Like, how do you approach risk management in your trades? Do you have a specific system for setting your losses?
Yep. So I have so prop firms really has a effect on this. If it was just my funds, I would trade it a little bit different. But you're also playing a prop firm game, and that's what I trade primarily now. Only personal stuff I trade is my options account. But as far as risk management, when I'm in a conservative point, or if I'm in drawdown, or still building that buffer, what I do is I go in 2 to 3 micros. So that's 1 micro is $2 per point on the NASDAQ. So I'll be making anywhere between $2 to $10 per point. So I go 1 to 5 contracts. So I usually most of my setups give me like a 20 point, maybe 25 point stop loss. Sometimes I could get a real good stop loss, like a 10 point, 15 point stop loss. And with those, I could size up a little bit more. So my stop loss would kick me out and I lose like $100, $150 to $200. But remember, I'm targeting 2.5 plus. So I'm going to make, if I'm lose $100 on this, I'm going to make $250 plus on it. So I'm going to make $250 to sometimes $400, $500 on that 1 trade. So that's one way I'll set it up with the risk. Another thing I'll do, I only trade two times in a day. So sometimes if I'm not expecting much from the market, I'll use my 1 bullet. So like I'll have 1 setup and I'll have a $200 stop loss. And at $200, if I lose that, I have it set up on Top Step to where it kicks me out for the day. I can't trade anymore. If I'm not really sure on that first setup, I'll give myself 2 bullets. So I'll have a stop loss at $100, and that way, if I'm wrong, I could get back in later on in the day on the next setup. I still have wiggle room.
Okay.
So that's pretty much how I deal with risk management. Only 2 bullets, trading within that window, and I size accordingly to stay within that $200 loss in a day.
So can you walk us through your daily trade routine? Like, what does a typical trading day look like for you?
So I first thing when I wake up, I look at the market on the phone. I look at my key levels that I drew out the previous night, and I look at Asia session and London session. I just peek to see if London session took out Asia, and if London session took out Asia's high and low before New York open, I'm not trading 100% of the time. So like, I'm not trading at all. So first thing I do is to look to see if London took Asia's high and low. If it didn't, then I mark out the whatever liquidity hasn't been taken. So if, let's say, London took out Asia lows, I'm gonna mark out Asia in London high. And when the market opens, if, let's say, on a higher time frame, I'm looking for it to be bullish, well, I'm gonna look for it to take out sell side liquidity and then shoot up. So I'm gonna look for, after it made the manipulation, I'm gonna look for a setup going long. So that's what I'm looking at, like right when I wake up. And then I get to the office, mark out my levels as it gets closer to open, and then I start looking at, once 9:30 hits, look for that first presented fair value gap. I'm also marking out on a 15 and 5-minute, 1 minute important levels, and then I'm done by 11. But sometimes I'm done before like 10:30. So that's pretty much the routine with that. And I'm done. Don't look at the charts. I work, and also having a job keeps me on track because I have stuff to do. So it's like I can't just sit here and look at the charts. So I actually like having a job, because if I had a whole bunch of time on my hands, I would probably be taking a little bit more trades. But with that hard 11 a.m. alarm, and I have stuff to do, like real stuff to do, like I have to get off the charts. So that's pretty much the schedule.
So like, how do you stay disciplined in sticking to your trading plan, especially when the markets are unpredictable?
Yeah, so staying disciplined, it's an uphill battle every day. It doesn't get easier. Like, you just have to follow your plan to the best of your ability, and know that it's gonna be hard, and it's okay to be hard. But like, and you know that you're gonna slip up sometimes. Like, sometimes I slip up and I'll oversize because I was a little bit too confident, or I'll undersize or hesitate because I didn't want to lose money, but it was a perfect setup that I should have taken. So it's like, you can't beat yourself up on that too much. You just journal it, acknowledge it, and then when that same thing happens again, you conquer that, and that's going to give you way more confidence. So like, you have to be more lenient on yourself when you do mess up, and don't beat yourself up. And that'll actually help you stay on track and start to trust yourself more, like you actually know what you're talking about.
Yeah.
So yeah, staying on track, especially with losing streaks, you want to, that's perfectly normal. Like, some of the best traders, go through crazy losing streaks, a crazy drawdown, and you can't just throw your towel in and try to switch your strategy. Understand, like, it's all probability, and you might just be on the very unfortunate end right now. But if, let's say, you have a 70% win percentage, which is pretty high, and you went on a 2-week losing streak, that means if you're still trading your strategy, you have a huge win streak, like, right around the corner, just taking that same setup. So that's another way to look at it if you know your win percentage. So you have to just stick to your plan, and the more you journal, you'll be able to get a lot more confidence on what your win streaks and lose streaks look like. And when you do go through the lose streaks, you'll be able to adapt faster.
So that takes me to understanding your emotions, because what role does emotional control play in your trading, and how do you manage stress and anxiety during losing streaks?
So during losing streaks, I manage stress and anxiety by, again, just looking at that journal, replaying trades. Sometimes, I guess, as soon as you get into a position, your heart will start pumping real fast. And most of the time, that means you're in with too much size. So, you might want to note that down and then take, later when you review your journal, just remember, all right, the next day, let me go in with one less contract or two less contracts
Mm-hmm.
and see how I feel. Um, and when your emotions start playing a role in your trading, that's going to affect your win percentage. So
Mm-hmm.
a lot of times we'll be in a real good trade, but the smallest drawdown will feel like the world is coming in on us. So like you have to notice that, and like sometimes you'll be in a real good trade but have too much size. And when that retracement does come, you're like, nah, I don't like. I'm uncomfortable. Let me get out. Let me just take this $500. And you're looking at the P&L. You're not looking at the charts. So that 500 could have been a 5K day, but you're not ready for that size emotionally or mentally yet. It's okay. Just acknowledge that and then build your way up. Build those that consistency with the smaller positions, and that'll help your emotions with the that'll help manage your emotions, because the main thing most of the times is because you have too much size on. So like whenever you start feeling those types of emotions, you want to just size down, and then whenever you do size down and you start actually trading the charts, you'll start winning a little bit more. You get more confidence, and then you'll see that all right, that losing streak wasn't really much. It was mostly in my head. I just need to keep it as logical and on the charts as possible, and then that'll really cancel out the losing streak itself.
And so like let's touch on your learning and your growth, because I know that you're an ICT student, so you're heavy on that. What books or courses or resources have had the biggest impact on your trading journey?
Two books, Trading in the Zone, and
Mark Douglas.
yep, and three books: Trading in the Zone by Mark Douglas, The Best Loser Wins by Tom Hugard,
Yes.
and um, Psychology of Money. So Psychology of Money is not a trading book necessarily, but they have a few trading examples in there,
Right.
because money and emotions like go hand in hand. Like
Right.
some of
Right.
the smartest people like could solve complex math equations, but as soon as they put money on the line, they
Mm-hmm.
have the brain IQ of like a monkey. Like
Yep.
so it's perfectly normal for you to know all the stuff you know in trading, and as soon as you press the button, you start
Mm-hmm.
panicking, and you have to like just like that's a muscle you have to build.
And all the
So
logic
like
goes out the window.
yeah, all the logic goes out the window, and that's one thing like I became aware of. Like I really like when I'm in a trade, like I focus on like my breathing. I focus on like okay, I'm reminding myself why I'm in this trade. I'm reminding myself what I want to see.
Right.
Like I'm doing as much as possible to not look at the P&L, not look at how much money I'm gonna make or lose. And then the main thing is actually looking at how much money you want to lose. You could possibly lose on this one trade. Play that scenario in your head, like okay, if I lose this $200, where does that put me? Like okay, I still have, if you're trading prop firms, I still have 10 more chances. I have to lose 10 times in a row to blow this account. So I could let this trade play out. And if you're trading that strategy, that one strategy, doing everything to the T, the chances of you losing 10 times in a row is stupid low. If you lose 10 times in a row, you're actually closer to being profitable than you think, because you can just switch up a little bit. And if you think, do the opposite of what you want to do, and you're going to be a
Right.
huge success. Like some people with some high win percentages don't win 10 times in a row. So like that'll be a way to like cancel that out. And then with the Psychology of Money, he talks about why we do certain things, and I know that was also mentioned in trading in the zone and best loser wins. Sometimes we want to trade to prove a point, or we want to go on this vacation. Like, we're trading, that's all trading emotions. You're not trading like what's in front of you. So whenever when I was reading those books, and those three different authors were saying the same exact thing. And sometimes I think they even mention other books in the same book. Like, I know
Right.
Best Loser Wins mention trading in the zone, but
Mm-hmm.
yeah, like, just understanding those books, like, they weren't even technical analysis books. They were really mindset,
Psychology books.
psychology,
Yep.
and emotional books. So like, that's, to me, that's what trading mostly is. Like, the technical analysis, you can learn that in a month or two, but it takes 2, 3, 4 years for traders to turn profitable because of the emotions. So, in the psychology. So once you understand why you want to make money, like, what's your reason, um, you can, like, for some people, if they're a dad, they put pictures of their kids in front of the trading monitor. Like, all right, this is why I'm doing it, so I can't let my greed take over, or I can't let the fear get the best of me. For
Yep.
me,
A picture of me and my son is right here in front of my desk.
yeah, like, you have to. Sometimes we'll just get like wrapped up in the charts, but you have to like have anchors in the outside world to like
Yep.
bring you out of it. So like, yeah, the pictures of your family, the alarm to snap you out of it, like, all of that is gonna help you stay on track. And once you're aware that it's a mental game, then now you give yourself a way higher chance of succeeding, because a lot of times people fool themselves and think it's just a numbers game, where it is a numbers game 100%, but it's not only that. It's a numbers game, an emotional game, and a psychological game. So you have to win on three different fronts.
And like, so I know we already spoke about journaling, but how important is journaling your trades, and what insights have you gained from keeping a trading journal?
So yeah, journaling is one of the top things, because that's what's going to keep track of your trades. It's going to keep track of your mental state.
Word up.
It's going to keep track of, you also have to be your own coach. So
Mm-hmm.
like, you have to be your toughest coach and your biggest cheerleader all in one.
Mm.
So ironically, trading is going to make you a better person in life,
Word.
because you're not just going to be this elite trader and just be average in everything else. Like, naturally, it's going to start overflowing into other things. Like, when I started seriously taking locking in on trading, like, I consistently went to the gym. Like, I'm not throwing around 1,000 pounds and stuff like, when I was playing football, but I'm consistently still just staying in shape, keeping a sharp mental edge.
Right.
Sometimes, throwing around some weight is like getting stress off.
Mm.
So I'm not saying, I think on like the influencers and stuff, they go a little bit too far with that
Mm-hmm.
aspect, as far as like, oh, you need to wake up at 5 a.m. and you need to do this. Like, no, you need to do whatever is going to have you being the most productive.
Yeah.
So some people, sleep is actually going to have them
Right.
have like a lot more productive day.
And I
So
think that's a key thing about identifying, authentic influences versus a person that actually trades, because the
yeah,
person that actually trades is going to tell you, hey, you kind of have to build a system that works for you,
yeah,
and the influence is going
1,000%.
to tell you everything that look good.
Exactly. Yeah, like, they're doing it for clicks and stuff and views, but
Mm-hmm.
like, somebody who's really doing it, you can tell, like, look, bro, if sleep until 10 a.m. is gonna have your win percentage through the roof, like, sleep till 10 p.m. Like, you don't need to be there
Right.
for market open.
Right.
Some people going to the gym, that's therapeutic. Some people, they hate going to the gym, and now they're tired and they don't even want to trade. Like, you have to do what's gonna have you in the best state of mind to execute on a high level. So that's what journaling, one of the journaling things that's important, is because, like, you need to be able to identify, like, how do I feel in this trade? How do I feel off the charts? What's affecting me? If you're having a bad day in real life, or something, life happens, like, you have a family member that passes, you shouldn't be trading at all, because you're not in the right state of mind. You got into an argument with somebody you care about, like don't touch the charts, because if you win, it'll be cool. But if you lose, the downside, like you could just spiral and go into tilt. So it's like, being able to journal all that, like just asking yourself. I have a template in there. It's like, how do you feel? Um, Along with all like the actual trading stuff, like just on
Right.
the mental stuff. Like one of the questions is, how do you feel? So it's like, should you even be trading today?
Yeah.
Having a journal kind of keeps you accountable, and if you keep that in your routine,
Mm-hmm.
so now you know to ask yourself, well, dang, how do I feel?
Mm-hmm.
And it's like, yeah, I probably shouldn't trade today. So that's what that's an important part of journaling. And as far as how it helped, it helped because it keeps me accountable and on track.
So what are your views on demo trading versus live trading when it comes to refining your strategy?
Yeah, so starting out, everybody wants to just instantly get money.
Mm-hmm.
And I understand. I totally understand. But demo trading actually helps a lot. Some people, it's mixed reviews. Some people say it's not real money. You won't feel emotions. Some people say that the exact opposite. They say, look, you still getting mental reps and you're building confidence for your actual strategy that works. And I was on the fence. Like, I was like, I see what they're saying and I see what these people are saying. And both are true. Like,
Right.
honestly, both are true.
Right.
So, like, what I found with demo trading, it's hard to demo trade if you don't have a real strategy. But once you have that real strategy and that thing that you're looking for every single day in the market, paper trading is 10 out of 10. Like, you can get the experience without losing anything. And once you see, like, oh, this happens again and again and again, like, I have a 60% win percentage with this. Now you go put money in the market. Yeah, you have that confidence, but now you have, once you start putting live funds in, you're going to understand, like, no matter what, no matter how prepared you are, now you're going to feel something a little bit because you have real risk on the table. So you have to understand, like, yeah, the psychology and the risk behind the risk, like, it's going to definitely feel different from demo, like live versus demo, but don't underestimate paper trading. I think it's a real important thing, especially when you're learning in the beginning phase.
So how do you continuously improve and adapt your strategy to changing market conditions?
Yeah, so because I give myself a couple different ways to get into the market, like I can get in on a fair value gap, inverse fair value gap, bullish or bearish order block. Those two are like those two are the main ways I can, well, those three are the main ways I can get in. But at first I was only trading fair value gaps and order blocks. Inverse fair value gaps, I'll just use it as a confluence that, the market shifted and we're going the opposite direction. But that's actually one of the most recent adjustments I made. I started seeing where the market will create a fair value gap and it was at highs. So like I'm like, this is most likely manipulation, and then it'll create an inverse fair value gap. So like at first it would create a fair value gap, I would enter and then I'd get stopped out. And then the same thing was happening. So I'm like, okay, these inverse fair value gaps are starting to hit a lot more. So then I wasn't comfortable with inverse fair value gaps, but order blocks usually happen around there too. So I'm like, okay, I'll wait for the order block. So it'll create the order block and then tap back into it and shoot down. I have some real good entries. But sometimes you'll get the order block, but it won't tap back into it. So it'll just create a inverse fair value gap and it'll just shoot away without you. So I would have to watch the price just go to my take profit. So I'm like, all right, I have to incorporate inverse fair value gap. So with inverse fair value gaps, it's not as clean with the risk to reward, but you could get into the move responsibly and have that confidence that it's gonna hit that take profit. And always know if it goes back and tap that order block, you can add on to it there. It could create another fair value gap on the way down. You could add on there. But like that's the most recent change I've added was incorporating the inverse fair value gap because I saw literally every day for like 2 weeks straight, an inverse fair value gap with some real good risk to reward ratio was presenting itself right after the sweep of liquidity. So I'm like, I can't just not trade this. So I was able to spot it out through losses, through journaling. And that's, you have to be able to adapt and know the market is going to change. Really, like, the market is seasonal. So in the summer, it'll trade like this. Winter, it'll trade like this. Fall, to me, is around some of the best times to trade. Like, you'll get a lot of volatility and you'll get a lot of good movements. Winter is not really the best, for me at least, with my strategy, because it'll be choppy, it'll be slow. There's a lot of holidays in that area, so you'll have a lot of off days. So that's how you have to be able to adapt and know when to put on a little bit more size, when to slides down, when the fair value gaps are hitting, when the order blocks are hitting, when the inverse fair value gaps are hitting, and know like, okay, I'm expecting in bearish markets, I like to see you're going to get your move, you're going to get your entry, and it's going to shoot away. Bullish markets, you're going to get a lot more manipulation, slowly going up and down, but going up over time. So when you see that, you can look for, okay, those inverse fair value gaps, those order blocks, that's what I'm looking for. Bearish, I'm looking for fair value gaps, because it's going to tap into it and shoot away. Sometimes it might not even tap into it. It's just going to shoot away, and it's a breakaway gap. So you have to know and not be too strict on your entry model and understand, like, okay, this stuff is going to change. So that's how I do it.
So, like, let's touch on your broader industry insights. Like, what are your thoughts on the current state of the market, and where do you see trading opportunities today?
But yeah, so in the grand scheme of things, you have to look at if you're a trader, you have to, I don't say get political, but you have to understand who's in office and how that affects the market. Trump is a real aggressive president, so he's going to create a lot of uncertainty, and a lot of uncertainty is going to create volatility, which is good for traders.
Right.
So people are like, oh, you a Trump fan. I'm like, no, I'm happy that the markets are moving, because this is payday for me.
Being a trader, it means you have to be an opportunist.
Exactly. So it's like, I traded a little bit. I traded some of the Biden era, and I traded some of the Trump era. The Trump era and the Biden era are polar opposites. Like, it's crazy.
Yeah.
And there's pros and cons for
during
both.
Biden's term, I could hold a trade.
Yeah.
I could hold an intraday trade for hours and know it's gonna go to take profit. But with this Trump, man, he get in there, he say something, that shit.
Man, that happened to me. Oh my gosh, that happened to me a couple times. Like, I'm in a beautiful trade, and he just said something stupid. I'm like, why?
God, man.
No announcement, because I go off the news calendar too. Man, no announcement and nothing. Just He just felt like saying this at this time, and I lost. But it's like, you have to understand, okay, let me be quick with my scalps, or let me be have wider stops, or like, that's one of the things with adapting. Like, you have to understand, this is a lot, like a real aggressive president. So, stuff could change a lot. So I'm actually expecting a lot of opportunity this next week, because these tariffs are going to affect Thursday. So, what happened the last time we had the tariff situation, got a real good buying opportunity in the market. I'm not expecting like that to happen, but there is a weekly fair value gap that's about 200. That's about 200 to 500 points of wiggle room in the Nasdaq that I think we could tap down into, and that's going to be a real big move. Before, I don't think we'll crash, but I think we'll go to that area. Right. And as long as Trump doesn't say anything outrageous or do anything outrageous, we'll probably bounce from that area and go make new all-time highs again. But yeah, this next week, I'm not saying it'll be a straight shot down, but I'm thinking we'll probably slowly go down, do a fake relief rally, and then shoot down to that weekly fair value gap and then reverse. So knowing that on the higher time frame, because I'm overall bearish right now, I want to be looking for more bearish setups and look for buy side sweeps of liquidity and target the sell side, be on the side of the market.
So how do you feel trading has changed over the years? Like, how do you see things changing in the next decade?
So over the last few years, I mean, it's a whole bunch of things that affect the market. So one was like when I first started trading, it was the end of the Trump era, but it was with Biden.
You said 2021, right?
Yeah.
So it was right after the pandemic.
Yeah, right after the pandemic.
Okay.
So Biden was still in office, and then the markets it was, in my opinion, beginner friendly, because after the pandemic, stuff was just rallying. So like you could kind of just get in at the lows and like let it go. Like you said, hold intraday. But like now it's very sharp, fast, aggressive. Things could be looking terrible on Monday, but on Friday we make all time highs. Like it's crazy. Like I wouldn't be swinging in this condition for a long period of time. Like
Right.
I would be swinging maybe like on an hourly to 4 hour chart. Like keep it real short, because if you try some 2 week, 3 week plays in this news based market, like right now, that's one way to change. We're in a real news sensitive market. So Nvidia can make a deal with China and we gap up overnight. China could say, oh, we don't want to buy chips from Nvidia. We gap down overnight. So it's like you're not in those back rooms to make a decision. So it's kind of like gambling. And Trump could decide to put 100% tariff on these people and we gap down. So it's like, that's a news-based market, and it's similar to trying to trade earnings. Like earnings could be real good or real bad, but I just stay away from those type of trades because I like to look for, I know at 10 a.m. on this day, PMI is going to come out, and I know, okay, there's going to be some manipulation right there, and after that, I'm going to get in. So it's like, I like to get in those types of trades. So it's like, that's how it pretty much changed. And then over in the future, I think it'll be, there's going to be opportunity. I'm not going to say easy, but it's going to be opportunity because it's going to be a lot more volume in the market. More and more people are finding out about trading. There's bots that trade. They're lowering the PDT rule to 2,000 instead of 25,000. So that's a lower barrier of entry. So that's, again, more volume. And I think that's going to create more liquidity. And more liquidity is pretty good for experienced traders. And I remember watching the ICT video. He said back in 1990, you'll be lucky to get 20 points in a day out of the stocks that he was trading. He's like, now you can get 100 in a day.
Wow.
So like, he's like, over time, like if you look, like the charts are doing this, so like that's a lot more wiggle room to go intraday. So like, I think there's going to be a lot more opportunity. So the more you put into your skill learning trading now, the better.
And like, what are some common misconceptions about day trading that you think should be cleared up?
It's not gambling. Like, people think it's gambling. It's real similar to gambling, especially if you don't know what you're doing. But
gambling doesn't include a calculated risk.
Yeah. Like you're just going off of, I feel like this is gonna happen. Like
right.
You have to always understand you have no impact on the market. Like they're not hunting your stop loss. They're not. They're not. They don't care that you only need $500 more to pay your light bill. Like that. Like you have zero effect on it. So you can't go into it with a gambling mindset. You can't go into it thinking you can strong arm it, and you don't. So like I feel like those are like the known misconceptions. But like one I want to bring up is like just because somebody else made 10K or 20K, 30K, be appreciative of the $100 you made.
Right.
Like because that stuff adds up. Like that's $100 real that you could go withdraw. So like.
Plus if you're consistent, it's gonna come. Those $1,000, $2,000 days, it's gonna come.
Oh, in due time, 100%. And when I was trading the $2,000, $3,000 days, that was really premature. Like I
Right.
shouldn't have been doing that early. And now have way more experience, and I'm happy with my $100 to $500. You
Right.
know, and
Right.
most days it's about 200 to 300. So it's
Mm-hmm.
like that's fine. And then especially you incorporate the copy trading,
Mm-hmm.
now it's back at that thousands because it's
Mm-hmm.
200 times 5, 300 times 5. So
Yeah.
that's that's really how you want to approach it.
So like I wanted to touch on, because I know a lot of new traders tuning into my pod. So I want to see, what advice would you want to give to traders? What advice would you give someone just starting day trading today?
All right, find one mentor and stick to them for at least a year. Like if they're profitable and you know they're profitable, not in here trying to do the most exciting and extravagant things. Like they're talking mostly about the charts and teaching you this is what you look for, this is what you stay away from, and you can learn a lot from those people. So stick to one strategy and be intentional. Don't try to shortcut it. If they say trade with 2 contracts max, don't try to size up to 5 contracts on a high probability setup or what you think a high probability setup is, because you probably don't. If you knew, you don't know what a high or A plus setup is. So like you want to just stick to the course and learn and do exactly what they say. Don't try to speed up the process. That's one thing I did where, once I found out the ICT stuff, I was like, okay, now I can run. And I blew a funded account. So it's like, well, I blew 2 of them. So it's like, let me slow down. And then really, knock on wood, but ever since I sized down, I haven't blown any more funded accounts.
Real.
So it's like, yeah, you don't get those 10K payouts, but you also don't blow the funded account and you're still in the game to make money.
Yes. The name of the game is survival, man. Survive to the next day. We are risk managers first and traders second.
100%.
Protecting capital.
100%. If you can, the longer you're in the game, the better chance you have at being lucky. If you can survive and have money on the table to risk when we're about to have a week like how we're about to have, and it's going to drop, that sometimes it's not often, but sometimes the market will open and just drop.
Yeah.
And you could be a part of that move.
Right.
And you get in with your same position size, but you have one of your biggest days ever because you went in as a risk manager, not trying to gamble.
So like, if we could hop in the DeLorean and go back in time, what would you tell yourself when you first started trading?
I would tell myself, first of all, I'll tell myself, learn ICT. Learn ICT and stick with it.
Do these
it's
courses,
boring,
man.
but that's what you're looking for. Because his strategy, and it's not for everybody.
Right.
I've traded 3-4 different strategies, and those strategies work too. But like this one fits my personality. So it's like, even though this works for me, I wouldn't dare try to push ICT on anybody. Like, because I know for a fact when I started off, he was boring. He was talking long, and I was like, I could see how people don't want to listen to that. So like, but that boring stuff, he was preaching, and because I went through the experiences of the losses, when he was saying and talking about all that boring stuff, he was saying how to deal with those losses, how to incorporate win streaks, losing streaks, when to size up, when to size down. So like, that's what I'll say. Just, and it more so goes with that mentor. Stick with one mentor. Don't strategy hop.
And what's one mistake that you see new traders making over and over again? Trying
to compete with somebody on year 5, year 6, year 7. Like, if you just started, don't expect to make 10K in a day.
Right.
Don't expect to make 1,000 in a day. Like, you need to be $50 to $100.
Right.
Like, that's where you are right now. And work on consistency. After that consistency builds up, you can scale up easily. You could easily add another 0 on the contracts, and now you're trading 10 contracts.
True.
That's what I'll say.
So, man, coming down to the end, bro, I got this section I call sniper questions. You know what I'm saying? So these are rapid fire questions, and you answer the quickest answer right off the top of your head of what you think about. So, what's your go-to trading platform?
Top Step X.
Coffee or energy drinks?
Coffee.
What's the most important skill in trading?
Patience.
Favorite book on trading?
Trading in the Zone.
And do you trade with music or in silence?
Silence.
And best stress reliever after a long day?
Sleep.
Man, Joe, I appreciate you, bro. It's been a great conversation, man, getting to know you and understanding your trading process, bro. And man, I wish you much success, man. I'm following you, watching your progress, bro, and I'm looking forward to seeing your growth, bro.
Yeah, same with you. I appreciate you having me on. And yeah, like you said, it was a real good conversation.
Square business, man. Hey, thanks for tuning in, guys. This is another NOFOMO podcast where we discuss keeping it cool and adapting to today's ever-changing markets. If you enjoyed the episode, make sure you hit that like and subscribe button so that you don't miss the future drops. We got plenty more coming your way. Until next time, stay focused, stay disciplined, and remember, when it comes to trading, the best way to be is having no FOMO. Y'all be cool. We'll catch you on the next one.